In this video, I wanted to share my new fully automated stock valuation tool. It's a great tool where you can instantly see the financial metrics of a company and the discounted cash flow valuation of a company without having to manually input lots of data. You can also adjust your valuation assumptions to suit your own preferences, which will obviously have an impact on the intrinsic value of the company. So in this video, I wanted to show you how to use this tool for yourself. And if you did want access to this, then click the link in the description and you will get access to all of my content. So that's not just the stock valuation tool which I will be covering in this video, but it's also all the other content that you see on my channel, such as my original stock valuation spreadsheet, my stock portfolio tracker, and my budget tracker. And you will also be first to know of any updates for any more projects that I'm working on. So when you have clicked the link in the description, you will get a link to this website. And this is the first thing that you will see. So in here, all you need to do is enter the ticker symbol of the company. So for example, if I wanted to look at Apple stock, I just put in the ticker symbol for Apple. So that would be AAPL. And then all I do is click the Analyze button. And this will fetch the financial data and you'll see all this information. So firstly is just a quick overview of some of the key financial metrics. So you've got revenue, net profit, shares outstanding, and free cash flow. But if you scroll down a bit, you can actually see some of this information in a graph over a period of 10 years. So you can see, for example, the revenue of Apple and how it's grown or declined over the past 10 years. So these metrics are just some metrics that I particularly find useful when valuing a company. So for example, you've got revenue, which is useful to see the market share of a company over time. So if revenue increases over time, it means that the company has increased its market share in the industry. So this is useful to see, so you can see if the company is growing or declining. Then obviously you've got your net profit, which is obviously the bottom line figure in a company. You want a profitable company and you want to see how the company is making money. Is it increasing the net profit that it generates, or is that declining over time? So that is a useful metric to see. And then you've got shares outstanding. So this is when companies buy back shares. So ideally you'd like to see this declining over time, and this graph does look like an ideal graph for a company for shares outstanding, because it means that the company is slowly buying back shares, which increases your value as a shareholder. And then you've got free cash flow. So free cash flow is useful for a company because they can do many things with this, such as buy back shares to decrease the amount of shares outstanding. They can pay down debt, or they can reinvest back into the company. So ideally you would like a company to have high free cash flow, and you'd like to see this increasing over time. So those are just some of the useful metrics that I find useful when valuing a company and analyzing its fundamentals. So I've included all of that information there in a visual format. And if you scroll further down, we get to the discounted cash flow valuation of the company. At the moment, the intrinsic value of the company based on the discounted cash flow valuation is $184, which is based on a 10-year discounted cash flow analysis. To find out what assumptions are being used to generate this figure, we can just scroll down to the valuation assumptions section. So there is a lot of more information here which will obviously change based on the assumptions. And there's also useful balance sheet information here. All you really need to do in this website is just to amend the valuation assumptions. So firstly, we've got the discount rate, which uses the weighted average cost of capital. So at the moment, this is 8.5%, and this varies between each company. So this is something that you will need to find out more about, and what assumptions you would need to use for your specific company. And then the next metric is high growth rate. So that's the growth that is expected between 1 to 3 years. So usually in the short term, companies grow, and then in the long term, that growth is not always sustainable and it usually declines. But I'll get to that section in a bit. But if we look at the high growth rate, at the moment it assumes a growth of 12%, which is why the valuation is 184. But if I was to just say decrease this to around 10%, we can see that the intrinsic value also decreases as well. And if we look at the growth for the next 4 to 7 years, usually, as I mentioned, growth is not always as sustainable. So if I put a slightly lower figure of 5%, we can see this again brings the intrinsic value of the company down. And if we go further down, we can see the terminal growth. So this is the long-term growth of the company. It's usually always 2.5% for all companies in the discounted cash flow method, because this is usually just a representation of the inflation figure. So I usually would keep that the same at 2.5, but obviously you can adjust it accordingly. And that is basically all you need to do to get the intrinsic value of the company. So it is a very easy to use tool. And if we scroll back to the top, you can do this for any company by just entering the ticker symbol. So at the moment we're looking at Apple, but if I change this to Microsoft, I'll just put in the ticker symbol, which is MSFT, and then I just press analyze, and then it will update all of this information. So all of the financial metrics are updated, as you can see. And if we go further down, the discounted cash flow valuation is also updated for Microsoft. So in this case, it assumes an intrinsic value of $503. But again, this is something that you will need to look at the valuation assumptions to understand where this figure is coming from. So if you did want access to this new stock valuation tool, then click the link in the description. And if you do enjoy this sort of content, don't forget to like and subscribe the video.